And we always like to review our recently posted content. So from a couple weeks ago, end of last week, we posted our buying straddles and strangles on ultra ETFs better than the standard. We talked about a current look and explanation of the search tooling criteria. Why, if the market sentiment is saying a bullish buy, are we not seeing a lot of results for the naked put search or the covered call screens? We had that clarification on the market sentiment tool. A further talk after that original discussion on long or bought straddles. And yes, today, although I haven't sent the email out yet, we'll send it out with our segments, first few segments from this presentation. But yes, from a few weeks ago, the strategies for 3% monthly profit part 2, conservative income strategies, know the market, has now been posted as well. That was about an hour and a half ago that I posted that up there. So you want to check that out after this presentation or this weekend. We'll remind everyone with the email tomorrow with the first 2 segments from this presentation included as well. Now, talking about that market sentiment tool that we went into, this is the follow-up to the clarification on the market sentiment tool. On September 29th and September 30th, Thursday and Friday of last week, we started to see the very bullish buy indicators come up on the market sentiment tool. And that prompted some comments related to, you expect me to buy in this market? What are you talking about? Well, we started off the way we wanted. On the 29th and the 30th, as we wrapped up the presentation last week, we saw the market sentiment indicator continue the very bullish buy, and SPX closed at 35.85. And then on Monday the 3rd, we saw that move up to 36.78, then up to 37.90, and then held about a little bit at 37.83. The valves were easing off a little bit, so we started still being in the bullish buy and the light buy. And then, of course, we had the little bit of drop yesterday on 10.6, and we're going to see what the market sentiment indicator changes to at about 5 or 10 minutes. I'm expecting it to go back to a bullish buy or very bullish buy with a decline. But from where we saw the very bullish buy indicators, we were up 5.7% in a 2 or 3 day period. And then today happens, and we're back down to only 3 or 4 points above where we were at the low point on September 30th. Now, an email came in from the person who posed the initial question on October 4th. The email was sent, but from Friday, the original question is, do you expect me to buy in this market? And then we got the response, okay, looks like you were right. Wow, what a blast off. I'm too shocked to get into anything, still waiting for the letdown. Well, part of my response to him is that's responsible, in a sense. We want to take advantage of these kind of market movements if possible. We want to do it in a proper way. We were very specific on Friday that when we started seeing those very bullish buys, we were not saying take everything and close every position you have and just put it into speculative, leveraged long calls, near term or far out in time. Okay, you might have done good if you had the right timing in the first 2 days. But what we are saying is the trades that we opened, both Ernie and I on September 30th and myself again on October 4th, were the married put approach. Take advantage of a bullish market, but with controlled single-digit risk. A standard collar approach could have been useful also. We do expect the market to be volatile overall. This is my response on October 4th. But we still use this point as our entry for the preferred strategies. As I mentioned on September 30th, we got into NEM, Newmont Mining. That was up 6% on October 4th since we'd opened the position on Friday. 3% if we liquidated the married put, but that wasn't the plan. Ernie's LRN stock was up about 2% at that time, and actually right before we got the email, I had opened the new married put on ANET, Arista Networks, right before that email was sent. And the Fusion subscribers saw that. Well, with the back and forth, Ernie's LRN, stride is still up a little bit, 42.83 to 43.50. His stock was also up about 6% from his entry point at one point on Wednesday. NEM is still slightly up. Yeah, it's only 28 cents from where I bought it. The married put could be liquidated for about a 0.2% profit. Not the game plan. We did see the rise we wanted in the first 20 to 40 days. But again, nothing was done on it. I didn't do an income method because I wanted to see if this trend would continue. ANET took a little bit of a hit. And I got in at 120.47 on this position. It was up to about 123.80, I believe. But today it took a 5-point drop. It dropped yesterday too, but it took another 550 drop today, so it's at 116.41. But we're only down 1.5% on the position for only being in it for 3 days, so I'm very comfortable with that. Great thing about the married put approach, following the rules in the blueprint, is that it mutes the daily movements and the unexpected movements while still being able to profit to the upside. As I mentioned, I personally still expect choppy markets going forward, but I'm hoping this change today, due to the jobs report, slight increase, and that increased the yield rates, of course, is similar to what we saw back in June, but maybe a little bit less extreme. This came from part one of that 3% monthly profit, potential for 3% monthly profit. Is it possible? And what happened is we were in a very bullish buy situation. The market sentiment indicator went to very bullish buy somewhere around May 12th or May 11th. I don't remember the exact date. But in the middle of that movement up from when the market sentiment indicator switched to a very bullish buy, we would have moved from bear spreads to bull spreads, is what we were talking about in that presentation. On June 9th to around 14th, that's when we found out that inflation increased in May with the real numbers rather than decreased, and on June 16th was the 0.75 rate hike. Well, with that decline that you see from June 9th, from SPY being at around 410 down to about 365-ish, that triggered the very bullish buys again. And as you can see, over the next 5.5 weeks or so, after that downward movement, it decided to try and push back up in the direction it was going before that surprise announcement. So I'm hoping this little, I don't want to call it a surprise announcement. We kind of know these things are coming up, but I'm hoping this is a similar effect, that maybe we see 3 or 4 more days of a downturn, even though the very bullish buy is likely to be triggered on the market sentiment tool after today's movement again, but that maybe we go back to what we saw after that movement, June 9th to June 14th, and we're back into a bullish mode where that ANET position, my NEM position, and I hope Ernie's LRN position starts to look better, and appropriate income methods following the rules in the blueprint can be used. But having that proper structure gives us peace of mind for a bullish move in still uncertain markets, using the income methods to help reduce the risk, reduce the cost basis, and generate income. I'm relatively okay with today's move for these positions. Still profitable on one, still could do an income method, potentially could still do an income method on ANET, but I'm going to wait a little bit to see what the market gives me in the next couple of days before deciding which direction I want to go with the 12 different income methods, well, really 13 now, that are available in the Blueprint course, Radioactive Trading. Very quickly, on that note, Blueprint owners and Fusion subscribers, you're going to have more on that in a members-only presentation next week. It's not going to be live. It's going to be recorded and posted in the members-only section. We're going to talk about starting a married put portfolio from scratch, where to begin, how to select the stocks, and what approach to use. Yes, that is all discussed in the blueprint, but it's also a good idea to review those concepts on a regular basis. I closed a Starbucks position back around September 12th. And I was out of all married puts and in all cash in that portion of my portfolio until September 30th, when the very bullish buy started to trigger, and it jumped into NEM, and then I jumped into ANET. So this is going to review how to start that from scratch, what we look to do. Do we jump all in at once? Do we spread it out over time? Review the proper position sizing and more. So you'll have that available next week. I wanted to have it done by Thursday, but it took more time than expected to finish that part 2 of the 3% profit per month, focusing on the conservative income strategies as well. Well, all that being said, ladies and gentlemen, let's go navigate over to power options, where we can see maybe if the market sentiment tool has updated, but at the same time, of course, get to your live questions, which is the more important aspect. And I'm shocked, not overly shocked. I expected this to go to a bullish buy with the movement today, but it only moved up to a light buy, it looks like, and there's still one. The SPX MACD gap is still up in a bearish mode, but it's right at the edge there of the 13 indicators. Days over the SMA 20, days over the SMA 100, VIX is still bullish, obviously, and stocks hitting a new 52-week high or low. SPX number of days up didn't quite trigger into bullish. That looks like the closest one that hasn't gone yet. Trin is close, but not that close, and number of days above the SMA 100 is close to triggering bullish. But I thought we'd be more in this range today. Maybe 5 bullish indicators, 8 neutral, and maybe no bearish positions. I thought that's where we might be, but I guess it didn't quite trigger that movement enough. So here we are, just a light buy after today's decline and the movements of the past few days as well.